This is Bert Dohmen with Chart Guru. Today's March 7th, and I just wanted to show you a chart of Apple. I know it's a very popular stock, and it's not popular to say anything negative about the chart. You may love the products, and they certainly have some great products, but that's totally different than the stock. The stock reacts to different things, not just to how much people like the product. And here we have a chart of Apple over the last year or so, and you can see the nice run-up. This was actually a bear market rally from the low here at $388 in late June last year. We had predicted the decline. I said on national TV that we wouldn't touch the stock unless the price had a 3 in front of it, and here it did get the 3 in front of it, so that was a good buy point, and it was a very nice rally here up to $570. Certainly a lot short of what the bulls had expected. They were expecting $600, $700 and higher. So now we have a pattern here. All the hedge funds, of course, have been buying up here, and one had a big, prominent, and very smart hedge fund manager said buying Apple is a no-brainer, so he's got $4 billion worth of the stock. And now, of course, he's faced with a situation where the stock is declining, and he's got $4 billion worth, so how do you make an exit? So that's a dilemma unless you want to keep it forever, which may be his intention. But as a technical analyst, I just see a pattern here that is not very bullish. We saw the top here. This is a shoulder, this is the head, and this is another shoulder. This is called a head-shoulder pattern, and it is bearish. This is classic here. You had a big down gap one day where there was no trading. The stock was down over $50 because of disappointing earnings. Down gaps are produced when there is just a rush of selling and no buying. And then we had the normal bounce back here, and this closed the gap. That's called closing a gap. It just went right back to the low here, and that's where it stopped going up. This is very normal bear market behavior, and that's actually meant that the top was made. And now we are looking at this pattern here, and when the price goes below $510 on a closing basis, that would really complete this head and shoulder pattern, and then the bear market in Apple would be confirmed. So this is a time to be very careful if you're long Apple, and of course we are not. But I know a lot of people like the stock, and it is a time to be very cautious if you are in that stock. Thank you very much for listening today, and this is Bert Dohmen for Bert Dohmen's Chart Guru signing off.